You can just do things. You can just have big dreams. And in fact, it is frequently easier to motivate people, to marshal resources, to yourself get up every morning if the vision you have for the world is big. Look, my biggest piece of advice, and to be honest, I built an entire company around the idea that Bitcoin will be worth more in the future. But by that, I don't mean tomorrow or next week or next month or next year, but I mean, 20, 30, 40, 50. If it's a durable store of value, you should just hold it durably. My advice is think of this as a thing that you're holding for your children. And then obviously, I think you should hold it for your children inside your life insurance policy. But even if not, I think that's the right mentality.
So today I have the pleasure of being joined by Zac Townsend on the show. Zac, thanks so much for taking the time to be with us today.
Yeah, thanks for having me.
Yeah, of course. So I'd love to get started, as I do with most of these episodes, at the beginning of your Bitcoin journey. And that can be even before you discovered Bitcoin, something that kind of primed you or led you to that way. But I think it's always unique to kind of hear from people's perspectives, their opinion of where their Bitcoin journey started.
What a great question. I probably have what might be I'll answer both, where I think Genesis is, but then also where I literally got my first Bitcoin. So I think the Genesis, I grew up pretty working class. My dad was a postman. My mother was a waitress. I sort of ended up on a fortunate trajectory because I tested into a regional high school. And then I graduated college into the great financial crisis. So I graduated college in 2008 and literally had a job offer rescinded. And I think that that was the first time that I guess I had gone through I was naive and sort of working class. And then I was sort of moving up the socioeconomic ladder, and I went to an Ivy League school, and I was really didn't know much, and I studied finance, and it was all quite innocent. And then I think all that innocence was sort of shattered by the GFC. And I came out of that working or deciding to work on financial inclusion and financial empowerment and financial technology. And I moved out here to San Francisco. I was a relatively early employee at Stripe. And then I went through Y Combinator with my own startup that built banking infrastructure between fintechs and banks. And my whole theory of the case is the cost of a bank account should be zero because the marginal cost of database entries is zero. It actually is also naive for a bunch of reasons I now know. But anyway, it didn't make a lot of sense to me. So that was what I was working on. And that company sort of failed in the sense that we didn't get a lot of traction. We were completely right about the world. We've been completely vindicated by time. But in 2013, 14, 15, there just wasn't really the market. And so I received my first Bitcoin because Brian Armstrong was trying to buy us, which would have been another opportunity to have a boatload of money. And in that era, I'm not unique, actually. This was Brian's sign-up strategy among people he met personally is he would send you a Bitcoin, but you could only get it if you created a Coinbase account. But it was one Bitcoin, which at the time was $250. So he was thinking a $250 referral fee, not a $125,000 referral fee. So that is both the genesis and when I received my first Bitcoin into a wallet that I owned.
Wow. That's super, super fascinating. There's a lot of things to unpack there. I think maybe starting first with, because I like the way that you began kind of this, well, I like the start of your story, it's kind of, I think sounds familiar to a lot of people where, you mentioned you kind of went through this traditional route, let's say, of going to school and even to an Ivy League education, and then kind of getting burned by the or being kind of influenced by the great financial crisis, let's say. Um, how did your views on money or how we interact with money change during that time period? Like, what were maybe some of the insights that growing up you didn't have that you kind of gained throughout that period?
It's interesting. My initial reaction is I'm not sure my reaction to the great financial crisis was some monetary awakening in the like
Mm.
Bitcoiner sense that, oh, there's no, all money is made up. I actually think it was a slow burn, right? You start to be in like 2013, 14, 15, and you're like, how is it that the people who burned the whole world down have faced no consequences? Um, so that, I think that didn't necessarily like lead me into every little nook and cranny that we now like think of as being the heart of like believing in Bitcoin. I think it just made me very cynical about what was. Um, I'm not sure that was attached to the like dollar per se, but it was certainly attached to the system. So my motivations around working at Stripe and starting a company and thinking about and having a lot of respect for Robinhood and Gusto and all these companies does come from a place that like these incumbent institutions are old, they're broken, there's regulatory capture, they need to be disrupted. I think it was like a lot of other people, I think it's a slow burn in time, and I don't really think I really, I was dollar cost like buying $100 of Bitcoin every week from 2015 to 2021 or something. But I think that the impetus to start this business, um, which we will get to, but is a life insurance company entirely denominated in Bitcoin. We started this business in January 22. And I think that was a response to inflation and COVID. I don't actually think about it a lot, but I mean, I think that is the practical reality of like this, like, like we came to believe more in the idea that there will be a Bitcoin economy as the fiat economic system seemed more and more broken. But that didn't like that switch didn't turn on in 2008. I think it was like an evolution, right? Like the incumbent system's broken. There should be fintech. Like I'm interested in this Bitcoin thing. Oh, we faced the first real sustained set of inflation in my lifetime. I think that, that evolution led to, oh, okay, Bitcoin as something that I should essentially dedicate my life to.
Yeah, okay, that makes sense. Yeah, wasn't this like radicalized one day to the next moment of being in the great financial crisis and then kind of waking up to a lot of this stuff? Because I think, I mean, a lot of what you say is true and interesting. I think the concept around well, there's a few things there, but one of the things that is interesting also about your story to me is kind of your and I want to get, of course, into the company a bit later. But one thing I want to touch on kind of before we get in there is about your experience in Silicon Valley. You just mentioned also the Brian Armstrong story of him, sending you a Bitcoin as a referral for joining Coinbase. What was just in general like? How has that? Because I know I've actually lived in California for quite some years, and I had a few friends who lived up in the valley and visited a few times, and it's at least at that time, and I think it still is in a lot of ways, a very magical place. But how did that time period, especially being an early employee at Stripe, going through Y Combinator, all of those things, like what were some of the key lessons or anecdotes from that time that you carry with you now? And that doesn't necessarily have to be Bitcoin related per se, but I'm more just curious to hear a bit about your, experience in Silicon Valley and how that's kind of shaped you.
It's a great question. I really ask myself sometimes, am I a certain way, or did I and then I moved to Silicon Valley, or did I move to Silicon Valley and become more of this way? I think I have always been like a high agency person, and I have no idea where that comes from, because I come from a place of all the people I grew up with live within a mile of where I grew up. In like a small town in New Jersey, right? So, but something about me was always a little discontent, was fighting the like I have this story that I was just constantly being told I was going to grow up to be a lawyer because I was so argumentative with my teachers and with everyone. And it's funny in retrospect because it's not like we knew a bunch of lawyers. Do you know what I mean? It's not like there were people in the community and their parents were doctors and lawyers. That just wasn't where it came from. So I've always been that way. And I think that in some ways, the big lesson of Silicon Valley, whether it's the Collinsons or Brian or any other hundreds of entrepreneurs. And I'm definitely a, at best B player in the, macro community of Silicon Valley right now, but not forever. But I think that the fundamental lesson is you can just do things. You can just have big dreams. And in fact, it is frequently easier to motivate people, to marshal resources, to yourself get up every morning if the vision you have for the world is big and audacious. And yeah, I think that would be the big thing. And we are doing something absolutely crazy on some level, but again, it's easier for me to want to work on it. It's easier for others. It's easier to raise money. No small dreams.
Yeah. I think that's great, and I think that's the spirit of Silicon Valley. And that's also the definitely I never lived in Silicon Valley personally, but even just being in California and having friends up there and visiting, it's a really cool, unique place to like you said, for people who have high agency, who want to build things. So you had this original experience with Y Combinator, you need the startup. After that, or let's start at the beginning of the company that you are now running, which is Meanwhile. So where did that inspiration come from? Where did the idea for that company come from? And how did you get started with that?
Yeah, I mean, I had been thinking about life insurance for a while, and that might sound sort of crazy because it just seems so boring. But I think what life insurance is sort of made both needlessly complicated and needlessly boring, and then that's sort of terrible, for it. But at heart, these companies are about saving for the long term. They're about saving in case, what happens to your family if you die, what happens to your family if you live longer than you're supposed to. That's an annuity. Like, how do you plan and save for retirement? How do you plan and save for 5 years from now? These are actually the bread and butter of life insurance companies. Our company, life insurance company, is in Bermuda, which we can talk about. But in Bermuda, it's actually called long-term insurance. And I think that is even a better name than life insurance. It's not just about living and dying. It's about this whole world of savings. So I was thinking a lot about that. And I from my first startup that ended in 2015, all the way now up to the present. And sort of thinking about, okay, there should be a tech first company that works on this stuff, that tries to make it not boring, and that doesn't have necessarily a bunch of life insurance agents. And I could never figure that out, in the sense that I could never figure out what would make that business work, because technology is a great way to make a life insurer operate better, but it's not really a great like go-to-market strategy, or it's not really a reason to be, right? And then, so that was sort of like simmering, and we were thinking and talking about that. And then, as I had already mentioned, we had this completely separate, in our minds, idea, which is like, okay, there's going to be a Bitcoin economy. Not just that Bitcoin is currency, or sorry, not just that Bitcoin is like is an asset, or that it's gold in the ground, but it's going to be a currency. There's going to be an economy in Bitcoin, and that's the vision we saw. You know, it might not be a year, but maybe it'll be 30 years. But like let's think of this as an economic system, and then we thought to ourselves, okay, every economy in the world has certain financial institutions, and we're really comfortable with like regulatory bullshit. Like that's one of our like superpowers. So we made a list, and we were like, okay, there'll be a Bitcoin bank, and there'll be Bitcoin exchanges, and there'll be Bitcoin commodity markets, and there'll be Bitcoin asset managers, and there'll be Bitcoin payments companies. Um, and we thought a lot about those all, and like, you know, there's people doing a bunch of those things. And I don't know, we like didn't figure it out. And then um, I honestly woke up in the middle of the night, like 2 a.m., the week of Thanksgiving, 2021, and was like, there should be a Bitcoin life insurance company. um, and that would really help people save in like the most durable store of value in the world. Like life insurance is the original HODL. And I went to my office in the middle of the night, and I wrote a memo, and that like we couldn't get it out of our heads. We got really excited. We kept like, you know, maybe thinking about other things. We kept working on that. And then in January 2022, we raised a seed round in like 9 days or something.
Wow. Wow. Super cool. So yeah, I think again, there's a lot to unpack there, but the first thing, and I think myself included, as well as a lot of my listeners, right? Like the especially younger generation may not be thinking or actively participating yet in life insurance, especially if you don't have a family yet, you're not married. But it is important concepts, I think, to know and to understand how it works, how it functions. So I'd love if you could kind of explain um, how, like, maybe briefly the concept of life insurance, but also like how your company differs from like a traditional life
Yeah.
insurance company. Like, what is a differentiating factor?
Bitcoin. Um, okay, let me give you a 5-minute primer on life insurance. All right. So we're all going to die, but we don't know when we're going to die. So this creates a problem, you know, for each and every one of us. Hopefully not a crippling psychological problem, but just a practical reality that, you know, our futures are uncertain. So what folks realized, I don't know, 500 years ago, is although if you take a bunch of individuals, you don't know when any individual is going to die. When you put a bunch of folks together in a group, you start to get like statistical regularity. There's like a law of large numbers. So I don't know if I'm going to die this year, and you don't know if you're going to die this year. But if you take 1,000 people, maybe we have like pretty high certainty that one of us is going to die. So the original idea of life insurance is that we each put $1 in a pot, and then the poor bastard who, you know, gets hit by a bus, he gets $1,000. Like, so there's like risk sharing. That's the most basic original theory of life insurance. And then what happens is one, there's all actually sorts of gradations there, right? Like instead of saying who's going to die in the next year, it's like, I don't know when I'm going to die, but I want to like save for that eventuality. I might live a really long time, right? Which I means I might outlive my retirement savings. So maybe we actually all put $1 in a pot, sort of math doesn't work that way, but you all put $1 in a pot, and then we'll earn interest on that $1,000, and we'll pay everyone who's alive until they die. And that's the sort of idea of an annuity, right? Because someone among those 1,000 is going to live to 100, but we don't know who it's going to be, right? So you might want to protect against the idea that you'll live too long, as weird as that sounds. And then what happens is society/governments decide, it would be good if everyone had life insurance, because orphans and widows starving is bad. So then there are tax advantages and tax incentives to these products. So they the amount your beneficiaries might get goes to them tax-free. The compounding inside the policies is tax-free. And the big thing actually in the United States and a lot of jurisdiction is that you can borrow value back out of the policy tax-free. So I'll explain how that all works in the specific case of our company, but it's to say that we actually have we have a lot of the Bitcoiners who don't yet have kids or don't, have a wife or whatever. And the reason is because you're sort of actually just putting some of your Bitcoin aside so that you can get that Bitcoin out in the future tax-free, including capital gains tax-free. Okay, so that's sort of life insurance in general, and also how life insurance gets to be used by high net worth and ultra high net worth individuals because of it's like a tax and estate planning tool. And actually, annuities end up being unlimited size 401ks. That's sort of to simplify what they've become. Okay, so then what is special about Meanwhile? What's special about Meanwhile is we think the dollar is rapidly depreciating in value and will not be a long-term store of value. And we think that Bitcoin, despite day-to-day volatility, will be the greatest store of value in the world, particularly decade over decade. So we often start our sales conversations with a simple question. Would you prefer that your beneficiaries, kids, wife, nieces, nephews, yourself in the future, would you prefer in the future they got 10 Bitcoin or $1 million? And look, for a bunch of people in the world, the answer is $1 million, and they're like, don't give me those magic beans. I think, the people listening to this podcast probably immediately their answer was 10 Bitcoin. And if your answer is 10 Bitcoin, if you think that 10 Bitcoin will be worth more in the future than it is today, then you should plan, protect, do these tax planning strategies in Bitcoin. So then what we are is we have a company in Bermuda, not the Bahamas. Let me just start there, okay? Very important. Not where FTX was. The Bermuda is a legit regulator. It is where many of the largest life insurance and insurance companies more generally are based. Their entire economy is based on insurance. It's also where Coinbase's offshore operations are, Circle's offshore operations. They are a serious, thoughtful regulator who knows a ton about insurance. And they have let us start a company. And what is unique about that company is it truly operates in the Bitcoin standard. It does not have a bank account. It is a Bitcoin company. So our users, policyholders, they pay us in Bitcoin. We pay out all claims in Bitcoin. And then we do everything in between. Insurance, math, regulatory filings. Critically, we have audited financials. They are stated in Bitcoin. They are not in dollars or euros or yen or Swiss francs. They are in Bitcoin down to the Satoshi, audited financials, only company in the world. For us, truly, one Bitcoin is one Bitcoin. And we, by the way, did that for ourselves, which is that way we don't care what the price of Bitcoin is in dollar terms. When I've been running this company, the price of Bitcoin was started in the 30s, went down to 16.5, up to 70, back to 30, up to 120. It doesn't matter. Right? Our financial statements are just entirely in Bitcoin. Okay. So that's why life insurance, and then how our company operates entirely in Bitcoin. And there's what the product is. So the product is again, probably have never thought or heard about this, but it's called whole life. And it's called whole life because it lasts your whole life. And because you will eventually die, hopefully far, far in the future, then there will eventually be a payout. So in that way, it is a hodl. It's an intergenerational wealth transfer. It's about retiring your bloodline, as the saying goes. So what do you get from? So the core mechanics, I'm going to use big numbers, are something like you pay us 1 Bitcoin a year for 10 years, pay over 10 years. So you've paid us 10 Bitcoin. And then we promise whenever you die, that could be the day after you pay the premium, that could be 100 years in the future, you'll get your loved ones will get 15 Bitcoin. So you put in 10, get 15. We can talk about how we do that.
Yeah.
Usually a question. So then what are the benefits? One is you get insurance protection, right? So you get hit by a bus, someone you love is getting 15 Bitcoin to 10. Two is, even if you could do what we do to turn 10 into 15, which you can't, but even if you could do that, you would be paying interest income every year. So you wouldn't get as far as we get from the 10 to 15. You wouldn't get to 15 because of taxes, which suck. So it's compounding tax-free. Third thing is what I mentioned earlier. You can borrow Bitcoin out of the policy, and that Bitcoin is tax-free and new tax basis. So imagine it's year 20, you've put in 10 Bitcoin, and you're like, Bitcoin's now $10 million a coin. You take a Bitcoin from us, you borrow it out, and then that is new Bitcoin. You would not owe any capital gains between now and then. So we have users who, on some sense, they don't need life insurance, right? They have got thousands of Bitcoin. Everyone's going to be fine. But they'll buy a policy from us because this is like the right tool to have in the toolkit if you ever want some Bitcoin liquidity. There's no margin calling. There's no reference to the dollar. It's just like you borrow out of Bitcoin. And then we actually don't expect you to ever pay the loan back. We just expect you to die. And when you die, instead of your kids getting 15, or your wife, or your whatever, they get 14 because you borrowed one out beforehand. And the fourth thing is we're under a legal obligation to make sure that somebody gets your Bitcoin. And that may not sound like a big deal, but like there are just so many horror stories of like somebody dies and then like the wife or the mom or whatever like can't get it doesn't know where the key is, blah, blah, blah. Like not only does your Bitcoin pass to whoever that is tax-free, but also like we have to hunt that person down. We have to find them. We have to help them set up a wallet if they don't have one. Like all those like mechanics of legacy management. Yeah. And what's cool about this product is it's really innovative because it's in Bitcoin, but it's actually really simple. Like we run a life insurance company from like the 1830s. We are very safe. We're very conservative. This product is really straightforward. When you sign the contract, like a human being can read it. It's only 10 pages. It's not 1,000 pages. Like we really pride ourselves on like, because we're using the best and hardest money in the world, we can just not do all the crazy, complicated, try to trick you stuff. We can just give you a dead simple, trustworthy product. Okay, I monologued there for a long time. Hopefully that was helpful.
That was super, super interesting. To be honest, for me, this is also a very new space in Bitcoin for me because I'm very familiar with Bitcoin and a lot of the innovation that's coming up around it. Like as you said earlier in the episode, Bitcoin is going to be a whole economy. So there's constantly new products and companies coming out. This is a new area that I haven't personally explored much. To be honest, your company I assume, is it the first company that's offering life insurance?
First and only.
Yeah, okay, exactly. So it makes sense.
But when we dominate the global insurance market, because we're the only ones that use, real money, then everyone will know our name.
So one question, first, I have many questions, but let's say the first question that I have, which I think you alluded to earlier, I think a lot of people will have is we're going like very basic math here, but you're saying, you lend us 1 Bitcoin a year over 10 years, and then when you die, your heirs get 15 Bitcoin.
Yeah.
Explain to me how exactly that works, because I know a lot of people, and especially in Bitcoin, there's all these sayings like, if you don't know where the return or the yield is coming from, you're probably that. So,
I'll tell
and
you
especially with
exactly
a
where the yield's coming from.
yeah. So let's do that. Let's dig in.
Yeah. Okay. First off, I want to start, and this is going to, I'm absolutely going to answer the question, but I want to start by saying, because I think there's going to be an economy in Bitcoin, I believe there's going to have to be capital markets, and there's going to have to be debt capital markets. And although BlockFi and Celsius and Three Arrows and Voyager and FTX were fraudsters and stupid, for Bitcoin to work as a currency, there's going to have to be like a yield curve. There's going to have to be like the notion of like, I borrow Bitcoin and I, build an oil refinery and then I pay back the loan, right? So that's just an ideological thing. Some people, I think, don't agree with that, but I'll just say like that's where we stand. We actually see our mission in the world as twofold. One is this critical financial service for individuals, and the other is to like help create these debt capital markets. So fundamentally, what we do is we lend to institutional counterparties that you know the name of. This is B2B, really not hedge funds. We lend to them. They on an over collateralized or fully collateralized basis. So almost like 90% of the loans in our balance sheet are in this collateral loan bucket, which is like we are regulated. There's an auditor. There's an outside actuary. We have to show people all this stuff. Almost all of our balance sheet is fully or over 100% or above collateralized loans. And why do counterparties do that with us? The reason they do it with us is we have something that no one really seems to use in Bitcoin, which is we have an incredibly low time preference. That is, people trust us with their Bitcoin, and we're very, we take that trust very seriously, but they are trusting us with their Bitcoin for decades. So what we're able to go and do is say, hey, we are willing to lend you Bitcoin for a year or 2 years when no one else does lending that long. But what we want is we want credit protection. We don't YOLO it with no collateral, okay? We negotiate 100-page lending agreements, covenants, seniority. No, we will not lend to your Cayman subsidiary with negative equity. Do you know what I mean? We want to see your financials. We want to hold the collateral in our Anchorage account, stuff like that. I think the most important thing to understand here, beyond the like we trade duration time for credit protection, is we aren't getting 10% yields. There are no 10% yields. We promise our users 2% returns, that's 10 to 15, and we try to get about 3% returns. And then that spread is the business of life insurance and how we make money. But yeah, that's what we do. We run a private credit shop in Bitcoin. We have been doing that for coming up on 4 years. We have never had a credit loss. And I think it's always important to say, like, we have hundreds of Bitcoin at stake. Because to run an insurance company, we have to put a bunch of capital up. We put hundreds of our own Bitcoin up, and then our users have now trust us with hundreds of Bitcoin, hopefully soon thousands.
Yeah. Good. Well, interesting explanation. I mean, obviously, I think it makes sense, right? To run, a business like that, you can't give your users free Bitcoin. I mean, I assume, and I think that's also part of, I think, a bit of an ideological battle within Bitcoin, right? Because I think Bitcoin originally comes from this very purist standpoint where it's like a bit anti-debt and especially debt capital markets. But I think when users sign up for a product like yours, especially when there's that agreement that, you pay us this amount over this time, and then when you pass away, this is what your heirs get. There's also an assumption, I think, of, well, anything, if you're going to make a gain on it, there's also an assumption of some type of risk. Now, like you're saying, it doesn't compare to the BlockFis or the FTXs that were completely irresponsible and dumb with people's money. But I think that, and that's also something that I think as Bitcoiners, I think we need to think more seriously about, because I think there will always be demand for these types of products, right? I
Yeah.
think because of the way that crypto in the past has, I don't want to lump Bitcoin into this, but like crypto in the past has kind of functioned as a lot of these scammers and people who, essentially over leveraged themselves and blew up people's money. So it's a fascinating product.
Well, can I just say one thing,
Yeah.
which is, I agree with all that. And two things I didn't mention that I want to mention. The first is that, when we have conversations with people, I find in every Bitcoiner's heart, there are two ideas. One idea is an idea around self-custody, not your keys, not your cheese. This like fundamental belief in that. And then the other end of the spectrum, there is just like, a distaste for taxes. and and what we find is that people come to us and they have to, we get on the call. We have a call with every single person who's even considering signing up. And yeah, there's all sorts of questions, and people want to look at our audited financials, and they want to like go to the Bermuda Monetary Authority's website and make sure we're regulated, and they want to hear about our enterprise risk management framework, and like, I don't know, see the credentials of our chief risk officer, all this stuff. But at the end of the day, what I'd say is most people, they don't send us their whole stack, and we're not asking for that. You know what I mean? We see people like they have a hardware wallet buried in their backyard or whatever. They have some multi-sig solution with a Casa or Unchained or on-ramp or whatever. And then like we're part of that mix. And one of the things I like to tell people is we actually have a policy maximum. We've had people approach us and say, "Oh, can I buy 1,000 Bitcoin policy?" I wish I could serve those people, but no, we just have a max of you can only put in like 30 or 40 Bitcoin. Depends on your age and stuff. And the reason that is because the whole company is run very conservatively. And if we took on a really big risk and that person got hit by a bus, we'd all be screwed. So we're slow and steady. And yes, I think we have people who obviously just this isn't going to work for them. But I think we're fortunate that, again, we started in January 22. We've rode the wave. We kept building through winter. I think we've done everything right, and we try to meet our potential policyholders on that level. And I think we're very fortunate that, we take it just so seriously that so many people have trusted us with what we think is the most important store of value in the world.
Yeah. And I appreciate that. And I think also there's two things. I think one, the focus on just Bitcoin, I think is super important, because I think a lot of these blowups in the past have been more because they're a lot of times crypto casinos and playing that game. So I think the Bitcoin only focus is very important in my opinion. And also I like a point that you mentioned there, which is, I think sometimes, and maybe it's exacerbated now with social media, but I think sometimes, and especially because Bitcoiners are very ideologically intense at times, and at times rightfully so. But I think a point that
That's an understatement, yeah.
Yeah. But I think a point that you made there is very important, is it's not like a black or white thing. I think, like you said, people shouldn't put their whole stack into these types of products, but there is room in your Bitcoin portfolio for these types of products. Just like, to give you also an example of like personal experience for myself, because I'm also basically all in on Bitcoin, with the fiat that I have to deal with to pay my bills here. But the problem with that is getting liquidity out of that is very difficult, because either you incur a capital gains tax or you have to find some other way to do it. And obviously now also part of your product is kind of the Bitcoin backed loan product, which I've actually done a Bitcoin backed loan now also to fund my own business and things like that. But there's also an interest charge on that, and you're also paying
Yeah.
a charge on that. So I don't know. I think this concept of like
Well,
you go ahead.
I'm sorry.
No, no.
One of the collateral loans we actually do for people is they'll send us low tax basis Bitcoin, which we just keep in a vault. So you have to like trust us that we're keeping it in the vault. But you can see the wallet. And then we'll send them high tax basis Bitcoin, new Bitcoin. And people will pay, we charge about 3% for this, 3.1%. So people will pay for this repurchase agreement between us and them, exactly because there's just this artificial reality that like disposing of Bitcoin is a capital event, which doesn't really make sense. Like it's not true for other currencies. So that's just actually an example that like what's nice about that is there's no credit risk on either side, right? Like if you send me, I'm using really big numbers, but if you send me 100 Bitcoin and then I send you 97, and the 97 is better than paying capital gains tax, but the 100 is just like in a vault. But neither of us, if I go bankrupt, you have the 97, and if you don't pay back, I have your 97, right? So, and we are able to do this as an insurance company. Like we're the perfect counterparty exactly because the right way to do this is you enter into this agreement with us, and then we just let you roll it. You just keep paying interest every year, and then eventually you'll die, and then there'll be a step up in capital gains basis, and your kids can unwind the trade. But I actually use that as an example because that's the type of. It sounds. I mean, people should reach out if they're interested in that, but we look for things like that, ways to get yield that are completely collateralized, almost no credit risk. You still have to like trust us that we're custodying it, and we use Anchorage and all this stuff. But I think we're Bitcoiners at heart, and we're trying to provide this financial service, and we spent a lot of time trying to figure out how to do it in a trustless way, and there's just not really a way to follow all the tax and compliance rules. So here we are.
Yeah. And it is difficult, and I think that's a major obstacle that, obstacle that also presents opportunity at the moment, right? For Bitcoiners who are, like yourself living on or especially like your company also kind of focused on a Bitcoin standard and trying to live that reality. How do you see that? Do you see that changing significantly in the next few years? Like, do you see the legal infrastructure around and tax infrastructure around Bitcoin changing, or is that more of a fantasy at the moment that we will get kind of those tax benefits? I mean, not that you would want to. That's also another battle, right? You don't necessarily want to dispose of your Bitcoin either, but if you do have to sell it instead of getting a capital gains tax slapped on your list.
Look, obviously, we're having a lot of positive legislative changes in the U.S. in particular this year, and we are certainly riding a lot of those tailwinds around. Like, it's just such an institutional year in Bitcoin, and I think we are very institutional despite being Bitcoiners. I think it is going to take a long time, though, to achieve my vision, which is that like, despite being global and decentralized, like Bitcoin is treated as a currency with an economy. And I think that that'll be more driven by use cases and like economic realities. And then the laws will catch up. Then, it will be facilitated by changes in the tax code. So I think, yeah, it was. Also, I've run this company across a few different or two different presidential administrations now, so I choose not to be too optimistic in the present, so that I don't get too pessimistic when the winds change. Our business is the business of meeting our commitments, being trustworthy year over year, decade over decade, and I think that the tide of Bitcoin adoption is unstoppable, but I'm not betting on it being just like my conversion to Bitcoin took time. So too, I think the world's conversion will take time.
Yeah, well said. I think so too. And I think I like your mentality of just building anyways and building, the future that you want to see. So, yeah, it's been a really, really fascinating conversation. The final question I have for you, because I know, we're now in a time period where a lot of new people are entering the space. Hopefully that will continue to happen, but it can be a confusing space when you're entering it with a lot of opinions, a lot of different things going on. So what advice would you have for any new people who may be entering the space?
Look, my biggest piece of advice, and to be honest, I built an entire company around the idea that Bitcoin will be worth more in the future. But by that, I don't mean tomorrow or next week or next month or next year, but I mean, 20, 30, 40, 50. And so that is my biggest piece of advice I give people is I think sometimes they want to, I don't know, buy low, sell high, like actively, like I don't recommend that you actively trade Microsoft stock either, right? Like, if it's a durable store of value, you should just hold it durably. And I'm proud I had the foresight to dollar cost average into Bitcoin over time. And that's what I recommend to people as well. There's all sorts of advice about like, I guess what you do, which is like completely being in Bitcoin and living in dollars. I think that, or living in euros or whatever. I think that also that's a big jump. So like my advice is like, think of this as a thing that you're holding for your children. And then obviously I think you should hold it for your children inside your life insurance policy. But even if not, like I think that's the right mentality.
Yeah, I like it.
Can I plug my website?
Yeah. I was gonna ask if you.
Okay.
That's my last thing. Where can people find you? Find the website. Find more about what was up.
Yeah. So we're at meanwhile.bm, which is Bermuda, but meanwhile.com redirects if you can't remember that. And the number one thing I'd say is if you sign up on the website, that is not a commitment to send us your Bitcoin. That is a commitment in some ways to get an email from us saying, why don't we jump on a call and talk about what we do? So that really, I'm at Zac Townsend on X, and you can DM me, but really we want like to have a personalized one-on-one conversation, really build that trust. You can know that we're not a bunch of anons. We're running this company for real. And yeah, thanks so much for having me here.
Yeah, Zach, I really appreciate that, and I will put all of that in the show notes as well, so my listeners can find that. Yeah, thanks so much for the discussion today. I think there's many other threads I could have pulled on and kept going, but I learned a lot actually myself, so I really appreciate that.
Great, thank you.